Today's update is important, especially for seniors and retirees who are trying to understand the recent headlines about stimulus payments and the talk around a possible amount close to $3,200 arriving this week. Many people have seen messages, social posts, or conversations suggesting that the IRS is sending out a new stimulus payment right now, and that number has created both hope and confusion. In this video, we are going to slow everything down and explain what is really happening, what the IRS has confirmed, who may qualify for payments connected to this amount, and how this fits into the larger picture of Social Security, pensions, and retirement benefits in the United States. The goal is to make sure you walk away informed, calm, and confident about your situation. Let's start by clearing up the biggest misunderstanding. When people hear stimulus payment and a specific dollar amount like $3,200, it sounds like a brand new check that everyone will automatically receive. That is not how these payments usually work. In most cases, amounts like this are connected to existing programs, tax credits, or a combination of benefits that are being issued or finalized now. The IRS does not typically announce a surprise universal payment without months of public discussion and official notices. What is happening now is more specific, and it affects certain groups more than others. The IRS has confirmed that it is continuing to issue payments related to past stimulus programs, tax credits, and adjustments that were delayed, corrected, or never received by eligible individuals. For many seniors, this includes people who missed one or more economic impact payments during earlier stimulus rounds, people who qualified but did not file taxes at the time, or people whose income or filing status was later updated. When these amounts are added together, especially across multiple credits or years, the total can reach figures close to $3,200. One major source of these payments is the Recovery Rebate Credit. This credit was created for people who were eligible for stimulus payments in previous years but did not receive the full amount they were entitled to. Seniors who relied mainly on Social Security, SSI, SSDI, or VA benefits were sometimes left out at first, especially if they did not normally file a tax return. Over time, the IRS worked to correct this, but some payments were still missed. If you later filed a tax return or the IRS corrected your record, a payment could now be issued. Another factor involves changes to income reporting. Some seniors had income fluctuations during the years when stimulus payments were calculated. If your income was initially too high based on older tax data but later dropped, you may have become eligible for a full or partial payment. When the IRS reviews updated information, it can trigger an adjustment payment. These adjustments do not always come with a lot of publicity, which is why they often appear suddenly in bank accounts or mailboxes. It is also important to understand that the IRS works on a rolling basis. That means payments go out in batches, not all at once. When you hear this week, it usually refers to a processing window during which a group of payments is being released. Some people may see direct deposits, others may receive paper checks, and some may get prepaid debit cards. The timing can vary depending on how you normally receive tax-related payments and whether your information is up to date. Now let's talk specifically about seniors and retirees. Many older Americans depend on Social Security or pension income and do not file taxes every year. This has been a major reason for confusion in past stimulus programs. The IRS uses tax returns as its main source of information, so when a return is missing, payments can be delayed. Over the past year, the IRS has continued to identify eligible non-filers and issue payments retroactively. If you or someone you know finally filed a simple return or used an IRS tool to confirm eligibility, that could explain a payment arriving now. There is also confusion between federal stimulus payments and state-level relief. Some states have issued their own payments, rebates, or inflation relief checks. When people add a state payment to a federal adjustment, the total can look like a single large stimulus amount. However, these are separate programs with different rules. The IRS only handles federal payments, but they can arrive around the same time as state payments, which adds to the confusion. It is very important to be careful with rumors. Scammers often take advantage of moments like this, especially when seniors are involved. The IRS does not call, text, or email you to demand personal information or promise a payment. Any legitimate payment is processed automatically based on records the IRS already has. If someone contacts you asking for your Social Security number, bank details, or a fee to release a stimulus payment, that is a red flag. If you are wondering whether you qualify for a payment connected to this $3,200 figure, the key question is whether you were eligible for earlier stimulus programs or tax credits but did not receive the full amount. This includes people who were over a certain age, had low or fixed income, or experience life changes such as retirement, disability, or the loss of a spouse. Eligibility is based on past rules, not a new program announced this week. For Social Security recipients, it is worth checking whether you received all previous stimulus payments. Many people remember receiving 1 or 2 checks but are not sure about the third. Others received partial amounts without realizing it. If something was missing, the IRS may now be correcting that. These corrections can happen quietly, without a new announcement, which is why people are surprised when a payment shows up. As we move into the second part of this video, we will talk more about how to recognize a legitimate payment, what to do if you think you are owed money but have not received it yet, and how this all connects to your ongoing retirement benefits. Understanding the system helps you avoid stress and make informed decisions about your financial future. Now that we have explained where these payments are coming from and why amounts close to $3,200 are being discussed, let's focus on what you can do and how this information fits into your overall financial picture as a senior or retiree. This part is about clarity, reassurance, and practical steps you can take without feeling overwhelmed. First, let's talk about how to recognize a legitimate IRS payment. If the money arrives by direct deposit, it will usually show a description related to the IRS or U.S. Treasury. If it comes by mail, it will arrive as an official Treasury check or prepaid debit card in a government envelope. The IRS does not require you to confirm anything before sending these payments. If you receive money without having to respond to a message or provide information, that is generally a good sign. If you believe you were eligible for past stimulus payments but have not received anything, patience is important, but so is awareness. The IRS processes millions of records, and corrections take time. Many seniors assume that because a lot of time has passed, the opportunity is gone. In reality, the recovery rebate credit allows people to claim missed payments by filing or amending a tax return for the appropriate year. This does not mean you suddenly owe taxes. For many seniors, it simply triggers the payment they were already entitled to. It is also helpful to understand how these payments interact with Social Security, SSI, SSDI, and pension income. Federal stimulus payments and related tax credits are not considered taxable income for Social Security purposes. They do not reduce your monthly Social Security check, and they do not count against income limits for most federal benefit programs. This is an important point because many seniors worry that receiving a payment will cause problems later. In most cases, that fear is unfounded. However, timing can matter for certain needs-based programs. While the payment itself is not income, having extra money in your account for a period of time could affect asset limits for programs like SSI if the funds are not spent within a certain window. This is something to be mindful of, especially for seniors on very tight budgets. Using the funds for essential expenses such as housing, utilities, medical costs, or debt can help avoid complications. Another important topic is budgeting and expectations. A payment like this can feel like a relief, especially with rising costs for food, energy, and healthcare. It is okay to feel hopeful, but it is also important not to plan your entire financial future around one-time payments. These funds are meant to provide support, not replace steady income. Thinking carefully about how to use the money can make a real difference in your quality of life. Some seniors choose to use unexpected payments to catch up on overdue bills, refill prescriptions, or handle home repairs they have been putting off. Others may use it to create a small emergency cushion. There is no one right answer, but the key is to use the money in a way that reduces stress rather than creating new worries. Let's also address pensions and retirement benefits more broadly. While this IRS update is separate from monthly benefits, it highlights a larger issue. Many seniors are not always informed when changes or corrections happen. Government systems move slowly, and information does not always reach people clearly. Staying informed, even at a basic level, helps protect you from missing out on money you are legally entitled to receive. If you receive a payment and are unsure why you got it, that does not mean it is a mistake. In many cases, the IRS has already verified eligibility before issuing the funds. Still, it is wise to keep records. Save the notice that comes with the payment or make a note of the deposit. This can be helpful if you ever need to explain it to a benefits office or financial advisor. At the same time, if you hear friends or family talking about guaranteed payments that you cannot find confirmed information about, take a step back. Not every headline tells the full story. Payments connected to past programs are real, but they are not universal and they are not automatic for everyone. Understanding that difference helps prevent disappointment and protects you from misinformation. As we come to the end of this video, the most important takeaway is this. The talk of a $3,200 stimulus payment this week is rooted in real IRS activity, but it is not a brand new stimulus program for all Americans. It is mainly about corrections, credits, and delayed payments for people who were already eligible in the past. Many seniors fall into that category, which is why this update matters. Staying informed allows you to recognize legitimate opportunities, avoid scams, and make better choices about your money. Whether or not you receive a payment, understanding how these systems work gives you peace of mind. Your financial security depends not only on monthly benefits, but also on knowing your rights and staying aware of changes that affect you. Thank you for taking the time to listen and learn. Information like this helps you protect your income, plan more confidently, and feel less anxious about unexpected changes. Staying informed is one of the most powerful tools you have as you navigate retirement and the years ahead.